Hi, this is Kerry Artac with Artac Advisory, bringing you a video analysis on the US dollar index. This video was recorded on Monday, March 8th, 2021. I use US dollar index weekly continuation charts. By the way, this is the futures. It presently reflects the March 21 contract, so you can trade this. The index itself is very closely correlated. I want to say close to 100%. This will roll to June in the next week or so. This March 21 becomes June 21 on this chart. All the levels I'm going to show you will be inherited, if you will, by the June contract. And just an FYI, the spread between those two is minimal. I think about a tick right now. So if you've got 92.27 last in the March, the June will be like 92.26, something like that. So it's almost not worth mentioning because when June inherits this, it will be very similar in price to the present March contract. So enough of that said. Before I jump into the charts and show you my thinking on the US dollar, and by the way, this is a repeat. You can find a US dollar index video from a couple of months ago where I was mentioning many of the same things, but this is an update. We have fresh information, a fresh signal as well. But before I jump into all that, just want to stress that if you're watching this video, if you're on the Artac Advisory website, please go to the free trial section. And it's the free trial form is everywhere. It's all over the website. Give me your first name, last name, email address, your phone number. I do offer a new free trial every 6 months. So if you haven't had one, no questions asked. I'll get it off to you within 24 hours. You'll have access to all the material that I produce on a daily basis for 2 solid weeks. You'll even get a phone call from me where we can talk about your trading, your hedging needs, and I guess that's all I'm going to say. Obviously, the idea is that you'll have enough interest then to become a regular monthly subscriber. Let's jump back into the US dollar index. Now, this is kind of a refresh, a rehash of information that I posted a couple of months ago, whereby what was it? The first week of January, we dropped to 89.16. 165 was the low in the first week of January. This was anticipated. I did have a sell signal afoot, if you will, that had been playing out for several months. And in fact, I can probably draw that sell signal right now. You'll find it on the chart at the time, just the settlement below a classic chart formation that held the low here. We rallied for a month, month and a half, then we broke, closed below it, and that was the beginning of a descent at that point in time to this long-term channel structure that is presently at 88.29. It's 88.29, 88.30 for the next few months. It doesn't change much because it's largely horizontal. It is 88.29, our base of support for the entire year. And we did drop to within 1%, almost to the very tick at 89.16. I do like the 1%, not only for testing significant long-term areas as you approach it, but also if you settle above a key long-term resistance or below a key long-term support. As you may be well aware, I like to see that by a 1% violation threshold. So 1% is big in my book, both for testing and for eliciting long-term signals. 88.29, 88.30, long-term support, able to contain selling through this year. And from here, we can trade higher. In fact, we do have a near-term buy signal that I'm going to show you in a moment. But before I leave this chart, just want to emphasize that while I certainly don't anticipate it in the coming months, closing below this 88.29 level in the US dollar index would signal follow through over the following, at the soonest 2 to 3 months, could take 6 months, depending down to 83 even, which is a level that can actually contain selling through the rest of the year as well. But so closing below 88.29, longer term secondary selling pressures continue, and we would expect 83 even within a matter of months. But we're not there right now. The way I see it, we've already essentially tested long-term support in early January, and now we actually have kind of a nice buy signal that played out really last week. This bar here was the first week of March. We did settle above this descending channel top. This is the key buy signal here. And that formation is at 91.77 this week, the week of March 8th. We also settled above an ascending channel top that goes back a couple of months, and that's at 91.97 this week. I'm going to be giving you this information where this channel top is, 91.77 is, through the month of March for the next 4 weeks in just a moment in the next slide. But the takeaway here is we have a fresh buy signal after having essentially tested long-term support in early January. I am now expecting bullish continuation. I'm going to say 2 to 3 months possibly, could take 3 to 5 months depending. I think we've got a 3 to 5 week buy signal presently in the 94 handle, 94.33 high, 94.80 high. I think this area can snag buying at least on a weekly basis, quite possibly a monthly basis. From here, could we back off into the low 90s? Sure, anything is possible, but I would expect more or less a pause for a week, 2 or 3 before resuming. Closing above this 94.80 line here is an obvious follow-through buy to the ultimate target. 96.85 is what I'm going to say the 3 to 5 month target right now. That puts us into later Q2, into midsummer. 96.85 is likely above 91.77, and that will remain a target. And I'm going to give you that information here now in the next slide, and that's kind of what I'm going to leave you with. 91.77 the week of Monday, March 8th, drops to 91.20 the week of Monday, April 5th. You can subtract these out. 91.77, 91.20 from 91.77, that's 0.57 divided by 4, and you'll have the rate, you'll have the exact location of this channel top each and every week in between. It is our floor of support, as I say, and continued weekly settlements above it maintain a 96 handle target over the next 3 to 5 months. And that is 96.85, drops to 96.28 the week of April 5th. You can subtract these out, divide by 4, and you could actually forecast this all the way into June, July of this year if you wanted to. And you can actually see that by June, it merges with this whole high area anyway. So that is our target. Bullish continuation. What is this? It's about a 5% rally in the US dollar. That's notable. How that equates then to you in terms of your grain prices, our big export products, crude oil, so forth and so on. I'll let you do the ciphering there. And that's probably something that you would do on a regular basis, especially if you're a producer of any raw export commodity. So how will a strong dollar impact that? I'll let you be the decider of that. It's just that I'm expecting continued gains in the US dollar over the months ahead. If we close back below this 91.77 formation, that would be considered a failed midterm buy signal, and I think you should then allow for that buy signal failure to yield this 88.29 long-term support level. Then I'm going to say within a month or two of that, we could collapse back to 88.29 if at the end of any week we wind up closing back below this 91.77 formation. But until then, bullish into Q2, above 91.77, anticipating the 96 handle or wherever this channel structure may be at that point in time. And that is all I'm going to say for this particular Artac advisory video on the US dollar index.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.